Now, last week's rate rise by the Reserve Bank, the 12th since May 2022, has increased Australia's chances of a recession. We're hearing that from analysts today. There's also a growing pressure put on here on the government as the cost of living increases. Joining me now to discuss this is Judo Bank's Chief Economic Advisor, Warren Hogan. Warren, thank you so much for your time today. Now, there's been a bit of a dispute between the RBA and the federal government about the impact of wage rises and whether these are inflationary. The RBA's position is that wage rises of around 4% are fine if there is some sort of improvement in productivity growth. The government is saying that wage rises are not impacting on inflation. What's your view on this?
Look, I think the real issue here is that wage rises of 4% are sustainable with 1% productivity, but at the moment productivity is going backwards. So that's putting all the pressure on inflation now and on the RBA right now. But the real issue is that wages look like they're going above 4%. The Fair Work Commission's decision was 8.6% for minimum wage and it's 5.75% for the other 20% of award workers. So that's a signal to the rest of the workforce. So, look, I think there's a real risk here that wages across the economy start sort of heading towards 5%. And, of course, that's going to continue to make the RBA's job very difficult and, of course, continue to put upward pressure on interest rates.
On rates to keep lifting, we've already seen 12 consecutive rate rise. Look, we saw AMP Chief Economist Shane Oliver give a prediction that a recession in Australia in the second half of this year is now 50-50. What do you think?
Look, I think there's a very high probability, 50-50 sounds fine, maybe even higher, that we'll get a technical recession. This economy's got to slow. That's what the Reserve Bank's doing. The government's not helping much. They're actually putting money into the economy, but the RBA has lifted rates a lot, 400 basis points, 4 percentage points in a year. That's the most we've seen in a generation. The economy will slow and it has to get rid of this inflation. We be very lucky if we don't have a technical recession. And that's just simply that definition of 2 negative quarters of GDP in a row.
Yeah.
But that might be mild. That might be the best we can hope for, because that will just be short-lived and we'll recover in late 24 and into 25. The real worry for me is that these wage momentum continues, that rates have to continue to go up into next year. And of course, it's not a mild recession, it's a deep recession. And that's later next year or even in 2025. And that's, of course, what the RBA is trying to manage right now. And that's why I think the move last week actually gave us our best chance of slowing the economy sooner, but also having a milder downturn. So there's a lot of uncertainty around this, but we're going to have a slowdown, and whether it's a mild technical recession, I don't think is the point. What we're avoiding is the bad recession.
The deeper recession, yeah.